Okay, I think we will start. Welcome again also to the people who just joined us. We're very happy that you are joining us today in this webinar on climate transition plans. Before we actually dive into the content, we would like to first discuss some housekeeping matters with you. So, as you have probably noticed, all participants are muted and video is disabled automatically. That means that you can share any questions that you have in our Q&A chat. I will be monitoring those questions and we'll make sure that those questions are raised to the speakers throughout the meeting, if as much as time allows it. And if any questions remain after the webinar, then we will make sure to answer those and send the answers over. Similarly, we will also share the slides and the recording of the webinar with you. And with that being said, we move to the introduction of the speakers, and I give the word to Stijn.
Yeah, good afternoon, everybody. I hope that you've been able to find, if you're in the Netherlands, a nice, cool place to watch our webinar. At least we did, and happy to have you this very sunny afternoon. My name is Stijn Schep. I'm senior manager at Impact House, Grant Thornton, and I coordinate all of the advisory efforts that we do with our clients that relate to climate change and nature. So we do a lot of advice for companies to deal with climate change and their impact on climate change, but also on other environmental aspects and their impact on biodiversity, for example. And we're here today with a very interesting team that worked on the climate transition plan for the NS, the Nederlandse Spoorwegen, the Dutch railways. And I'm here together with Johanna, my colleague at Grant Thornton. Johanna, welcome. And with Rolf Gelpke, who is a sustainability advisor at the Nederlandse Spoorwegen and who is responsible for the greenhouse gas accounting and SBTI targets that have been set by SBTI. Johanna, would you like to briefly introduce yourself as well?
Yes, thank you, Stijn. So my name is Johanna Hoeneman. I'm a senior consultant at Impact House, working a lot on the climate side of the work that we do, working on climate transition plans, GHG accounting, etc. And I had the pleasure to work together with Rolf on their climate transition plan, and I will give you some more technical insights today during this webinar.
Yeah, over to you, Rolf. Quick introduction.
Yes, thank you, Stijn, and good afternoon, everyone. So my name is Rolf, and I work for Dutch Railways, as Stijn mentioned, and I'm the one there in a team of sustainability professionals working on our sustainability goals and targets, and personal focus has mostly been on our Scope 3 impact, but also on science-based targets and the climate transition plan that we are more or less finalizing, although it's a living plan, and we have help of the team from Johanna and Britt and Stijn. So happy to share some insights from us today.
Great, and very happy to have you in the webinar today, Rolf. Thanks for joining. So to explain a little bit more about who we are and for who we work actually. So at Impact House, we do a lot of work that relates to advisory services on climate and nature. So we do a lot of climate transition plans, but that's not the only thing that we do. We generally help clients with creating insight in their greenhouse gas calculations through life cycle assessments, creating carbon inventories in line with the greenhouse gas protocol, setting targets, but also really helping to make that practical and easy to implement. And we actually do the same for biodiversity as well. So we create insight in biodiversity impacts of our clients and help them to get concrete and practical actions to improve that impact and potentially even have a positive footprint on nature and climate. Maybe a quick introduction on NS. I'm not sure how necessary it actually is, but because everybody from the Netherlands will definitely know the Nederlandse Spoorwegen. But perhaps a very brief introduction in the context also of this climate transition plan would be good to have a bit of an understanding of what an effort you're actually dealing with, Rolf.
Yeah. Absolutely. Yeah. So if there's people from outside of the Netherlands here, then good to know that we're a state-owned Dutch railway company. So we provide passenger transport for most of the Dutch railway network. For Dutch standards, we are quite a big organization with over 20,000 employees. And next to owning, operating, and driving the trains, we also manage all of the 400 stations in the Netherlands. You can click through with some key figures. I think mostly important for today is that we're working with a very intensively used railway network. We consider ourselves to be part of the solution for mobility. We run only electrified train lines with 100% green purchased energy. So at the one end, we see ourselves as part of the solution to get people to step away from using fossil fuels for their transport. But on the other hand, of course, we also have our own impact. And one of the targets that we have is to reduce our climate impact with science-based targets to 2030, 40, and 50. Maybe to understand a bit about the complexity that we dealt with in the past few months is that we are actually a company with several quite varying business units. So you have the organization that is responsible for operating and running and maintaining the trains, where there's a lot of technical materials, of course, assets with very long lifespans. On the other hand, we have the managing, building, construction, renovating of stations, which is more in the building and construction sector, which is a whole different ballgame. And another big part of our activities also comes from exploiting retail activities in our stations. So for the Dutchies, you will know kiosk and stationshuiskamer. Those are our own formulas. Well, within these retail channels, we also sell quite a lot of mostly foods and beverages. And all of that is part of our big footprint and our big, let's say, company scope. And we have to align, of course, different people within these different contexts with different backgrounds. And I think that's maybe a sneak peek to one of the challenges that we face in this project. But before going deeper into it, I think we have the rest of the more technical side first.
But it sounds like quite a challenge to get organized on your transition plan with such a complex and diverse organization as the NS. And a large amount of energy also consumed, of course. So very interesting to hear more about it in this webinar. So that brings me to the goal of today's session. We want to organize this webinar to basically shed some light on how, what is the strategic value of a climate transition plan? Why should you be developing a climate transition plan? What is the added value of the organization, and what should it look like? And then learning through the journey of the Nederlandse Spoorwegen of NS to have a bit of a better grip on what it looks like in practice. So yeah, hopefully this will help others as well to develop an ambitious and nice transition plan. If you're in the audience, if you have any questions throughout the presentation, feel free to drop them in the Q&A section, and we'll be sure to address them during the presentations or after. Okay, so let's start with a little bit of background. What is a climate transition plan exactly, and why do companies need it, right? I think a lot of you have heard about climate transition plans in the context of CSRD, in the context of setting targets on carbon reduction. But what it boils down to is basically that companies are now more and more asked, or sometimes even obliged to develop a climate transition plan that indicates how the organization is going to reduce their scope 1, 2, and 3 emissions towards targets that are in line with what the world agreed in Paris to stay within a very limiting global warming scenario of 1.5 degrees Celsius. And thereby reducing the scope 1, 2, and 3 emissions with 90% eventually in 2050, and also neutralizing any residual emissions that remain after that reduction. And the climate transition plan is supposed to create insight also in how you're going to get there. So not only that you're going to get to that target, but also how, through what kind of decarbonization levers or what kind of buttons you're going to use to make sure that you get there. And I think there's been a lot of discussion about do we need a climate transition plan in the context of of the CSRD with the whole omnibus developments. It's becoming less clear basically what the obligations are in terms of a climate transition plan. But we also see that a lot of our clients don't stop with developing this, and the primary reason for this being that there are a lot of other stakeholders that would like to see what organizations are doing to reduce their CO2 emissions. So first of all, there is that regulatory compliance, of course, but also, if this the compliance requirements change, we really see it as a no-regret option to develop a climate transition plan to be ready for regulatory changes that will come in the future, we're sure of. And then on the other hand, there are market demands. Your investors, your customers, they might have expectations about how you are going to reduce your climate impacts. It will help also to strengthen your sustainability commitment throughout the organization because you're making more clear with this vision actually on how you're going to improve your impact, what it will look like for your organization, how the organization can contribute to it. And finally, it can also lead to financial and operational gains. You look into improving and optimizing processes, and these can have a direct financial benefit as well to the organization. Maybe already a question to you, Rolf. So did you discuss already within the NS any changes in your compliancy requirements with regards to the transition plan, the CSRD that now makes it voluntary under the omnibus? Is this really changing your ambitions as NS to work on this climate transition plan, to report on it? Can you reflect a bit on that?
Yeah, absolutely. So I think when the whole omnibus developments came out, it caused quite some mixed feelings, I would say, for our department and also me personally. I think at the one hand it's understandable. It's a bit of room to breathe, to take a little bit more time to prepare on the upcoming regulations. So in a way, I guess we were happy to get a little bit of leeway, but for us, we were already quite, I would say, in the 4th or 5th gear on preparing towards CSRD reporting. I do see that also internally, the relief of having Omnibus also can take a bit of the priority of these actions away, so of making a transition plan, etc. I think it helps for us that we before CSRD actually came into play, we were already serious about science-based targets and reducing these targets. And personally, I also see the transition plan, of course, is something that is directly related to CSRD, and that's also where we looked at to see what are now the let's say best practices or the guidelines on how to do it. But I think every company that's serious about reducing and setting targets also should one way or another figure out how they are going to reach these targets. Right. And I guess it's a nice and very useful vehicle that we can use and adopt to find out if we can achieve it and to start these discussions in the organization. So I don't think it's, at least for us, it's not just a reporting requirement. We will use it for that, of course, in 2 years if we are CSRD compliant. But in the meantime, it's also a way to explain internally and also to our board of directors that we know that we can actually manage to achieve the goals, and that we do enough to achieve the goals, and also don't do too much to achieve these goals, because we're also living in a world where other priorities can also come into play. And this really helps to get a clear discussion or clear deliberation on what's important, and making sure that we don't lose the view of that.
So it has become more of an operational tool rather than a reporting requirement.
I think so, yeah.
Summarize what you were saying, yeah.
Yeah.
That's actually a nice opportunity as well, I guess, to be able to focus more on what you can actually do with it.
Yeah.
Okay. Then I think one insight that I would also always like to reiterate is that working on your climate transition plan is not a standalone sustainability strategy. I think if you're creating insight in your Scope 3 emissions and in your value chain, it's really a low hanging fruit to also create insight in some of the other impacts that your organization is generating, either through your own operational activities or in your value chain. And think about issues like pollution, the impact on biodiversity and ecosystems, the way you're using and sourcing materials, and to what extent that happens in a circular way. It provides an opportunity to look at your corporate governance systems that relate to sustainability management, and of course looking at more social factors that might also arise in your organization itself, or in the value chain, and creating or developing the data that is necessary for that climate transition plan also provides a lot of insights in those type of impacts. So yeah, I would always encourage to also involve the people in the organization that deal with other topics to work together on this. I think that's enough for me. Let's move to the actual case study that I think everybody has been waiting for. So Johanna and Rolf worked together on the climate transition plan for NS, Johanna will explain a little bit more about what the steps look like in practice to develop a climate transition plan, and discuss together with Rolf how that looks like in practice. So with that, I would like to give the word to Johanna.
Thank you very much, Stijn, and thank you for this introduction. I was just trying to take over control, but I think that doesn't work, so Brit will click through for me, so you will have some introductions where you can hear me saying this. So we're moving on to the more technical parts of the slides. Well, while we're waiting for the slides to come back up, I can already give you an introduction of what we're going to be doing throughout the next couple of minutes. So essentially, what the goal for this technical section is to talk you through the transition plan building blocks. And we only have an hour, so some of these things will be relatively short, but as Stijn mentioned before, if you have any additional questions on these topics, then please put them in the Q&A, or feel free to reach out to us after the meeting as well by email if you have any more detailed question, more in relation to your company. So I see our slides are back up and running, so we can move on to the next slide where we see the climate transition plan building blocks. So the figure that you can see here, this is what you might have seen in some of the first CSRD reports that are out, or also in specific climate transition plan related publications. So essentially, it is what Stijn introduced. It is a plan on how to go from where we are right now to our targets that we set for the future in terms of emission reductions. And what we will talk you through today is what you will need to do, or what you will need to look at in order to hopefully in the end result with one of these figures and plans for the future. So on the first part, we can see the emissions in the base year. So this is really where we're getting started. This is where we say, where do we stand right now? What do we look at? What is our business doing at the moment? Where do we have to work with? The second part is about the expected growth. When we look at expected growth, it is mainly a consideration to understand where our company is going to in the future. And we're looking at this mainly to make this plan less of a standalone tool, but to also closely connect it with your strategy in the future. Then afterwards, the next step is to look at science-based reduction targets. So both Rolf and Stijn already touched a little bit on those targets. This is really the question on where do we need to be at the end of this journey, at the end of our reduction journey, in order to be aligned with the Paris climate targets. And then we have the complicated part, which is the part in the middle, which is how are we actually going to do that? How are we going to get to the reduction? How are we looking at different opportunities where we can find this reduction potential? How are we turning this into actual plans? And how are we also making it work for an organization that, as Rolf described, might be quite complicated and complex and has a lot of people who are working on different parts within it? So let's jump right into the first building block on GHG reduction. So first of all, we're getting started with the base year calculation. The base year calculation is the inventory of all the emissions that are related to your company. And I guess a lot of you have seen the graph that we're showing here on the slide, which relates to the greenhouse gas protocol. And it gives an overview of what we would need to report on, because the greenhouse gas inventory describes all three scopes. So not only the emissions from your own operations, but also the emissions from electricity in scope 2, and the emissions that are happening within the value chain in scope 3. So what do we do if we have not started this inventory yet? Where do we think about? Some of the main considerations that we need to get clear at the beginning are, first of all, where to draw the operational boundaries. So when we look at this blue part in the middle, so our own company, the reporting part, what is it that falls within those operations? So what kind of entities are within the reach of our operations and our company? What kind of different services are we offering? What kind of products fall under our company? All of this comes in the very first part. The second part is regarding data collection. So when we think about data that is a little bit more closer to home, so for example, emissions that we have from our offices, from our own production, we might have quite specific data on what we do. We might know exactly how much money we spend on fuel. We might have the liters that we put in terms of gasoline in the cars that we are using. We might be very clear on that and just push a button in our systems and we have it. When we are moving a little bit further away in the value chain, that gets more and more complicated. So when we're talking about upstream and downstream activities, this data collection method can vary a little bit. So we mightn't have specific activity data, but we have to rely on spend based on how much money did we actually spend on certain services, on certain products, and link that back to emissions. And that leads us to the next question. How do I then go from sort of this general company data that we are having to actual calculations that relate to CO2, which are by emission factors? And for emission factors, we're essentially linking our activities that we are having to a certain factor, and then we have a CO2 calculation factor. And that, for example, can mean that we know how many liters we are tanking for our different vehicles that we have in our fleet, and we will use an emission factors for liters of gasoline, and that results in our CO2 calculation. But it can also mean that we look at all the money that we spent in the value chain, for example, on specific transport services, and then relate that back to CO2 emissions. And we will talk a bit about emission factors in a second, but before we go there, quickly we also want to talk about minimum requirements. As we heard from Rolf, getting started with these things and doing this for a complex organization can take quite some time. So it can take various rounds of preparation. It can take the engagement of a lot of people. So what we need is a very clear audit trail. So that means for every decision that you're making, for everything that you're deciding on, for every emission factor that you choose, keep a logbook, write it down, create an audit trail. So if people are doing this in the future in your organization, they will know what to look for. And if you're handing this over for a formal audit or a third-party assurance, you will also be clear on what has been done and they can check that your calculations are correct. And the second part is to prepare for doing this yearly, because we're talking about a baseline calculation, but on the other hand, we will also need to measure our progress. So these calculations are not something we do once and then we forget about them till 2050, but we have to do them yearly to make sure that we are actually getting all of the data correct and can see the process. And with that said, we are doing a little excursion to emission factors on the side because there are a couple of criteria. I will not go into all of them, but some things to consider when choosing these factors are, for example, the application range. So what can actually be measured by using this factor? What kind of activities are covered in the potential databases that you have? Other options that are important to think about for emission factors are the representativeness. So am I looking at an emission factor for energy, for example, which is made for the Netherlands, or one which is for the whole world? And other considerations are also things like the ease of access, can I access the database, or the completeness of it? And also how internally consistent is it? So am I using different databases throughout? What are the choices behind that? And why have I been going down that route? And I think it would be nice to hear quickly from Rolf how you have been dealing with these calculations at the start, and also maybe where you draw your boundaries for NS.
Yeah, sure. So we've actually been reporting part of our GHG emissions for I think maybe 7 or 8 years already in our annual report, where the focus was most of these years always on scope 1 and 2. So for us, all our trains are run on electricity. So that's also a huge part of our impact comes from the generation of electricity. So that's obviously what we need to report on and what's important for us and has always been to reduce. But over the years, when we became a bit more mature, our, as you already mentioned, Johanna, Scope 3 emissions also became more apparent to us that we actually have quite some impact in our value chain. So one of the things I, for example, personally are working a lot on is the production of spare parts and new trains and the emissions that are, for example, by the production of steel or whatever, are emitted. And so we, since last year, we've also incorporated that into our annual report, and that was also necessary for us to be able to get approval from the Science Based Targets Initiative on our targets. So with the Greenhouse Gas Protocol, there's quite a nice list of, I think, about 13 or 14 categories within Scope 3, and by running through all of them, it becomes a bit easier. I wouldn't say easy, but a bit easier to determine what's relevant and what can be part of our own emission source. I think one of the topics that we had the longest debate on is what's mentioned here on the right of the slide. So the downstream transportation. We call this pre and post passenger transport. So that's the way that the travelers come to the station to get the train and go from the train to their final destination. Officially, this is a bit of a gray area whether this should or should not be included into our inventory. But internally for us, the choice was this is something that we, to be able to provide our service of passengers traveling with the train, this is something that is necessary. So you cannot do it without it. And also we have some programs already in existence to reduce the impact of this pre and post passenger transport. For example, with the OV feeds or with electric charging at the stations. So we felt that it's on the one hand has right to be shown, and it's something that's part of us and also triggers us to find solutions for it and to improve it. But and that goes for all of Scope 3. We are so dependent here on the actions of other people that it's extra challenging to in fact achieve these goals in the end. So that's also somewhat scary on the one end, but yeah, we feel this is our responsibility, so we have to include it as well.
Thank you, Rolf. I heard quite a lot of nice parts, which will also lead us into the next step. So on the one hand, you said that it's part of a strategic decision, also what makes you as a company. So these plans are not just an inventory that you build up just so that you have it, but also that you work on strategically and that you connect with what you are doing. And on the other hand, I heard a lot of years that go into these calculations. So it's also something that is evolving and moving on. And I think that's a good step over to the next part about growth. Because when we are looking sort of on this inventory, we also want to include a little bit like where you're going strategically as a company. And this is especially captured in this growth part further down the line. So what we are asking here is like, how does your company evolve in the next couple of years? Because we're doing this one-time snapshot of an inventory once at the moment for the baseline, but then it will move differently and it will change depending on your business goals and also what you're focusing on. So essentially there are two parts of expected business growth, which is one, the organic growth part, where we talk about the fact like some gradual change in terms of how your company is evolving. So for example, for an asset could be like the amount of travelers, will it double in the next couple of years? Will it be slightly the same? Will it be just a bit of a change? So it is something like an increase in production or the expansion of a service line. So something that is very close to how your organization looks like right now. And then we have the structural growth. And here we're talking really about the big growth. So changing up your company completely, for example, through an acquisition or by going into another country, by having really this big change in the things that you are offering and what you are doing within your company. And that can bump up your emissions quite a bit within one go. So this would also mean that we might have to reconsider from where we've started and if our baseline is still representative of where we're heading in the future. And a couple of categories that are important to consider when thinking about growth in terms of emissions are, for example, the number of employees, and especially when thinking about certain thresholds. So will I grow a little bit in terms of employees, or will I grow that much that it requires 3 new offices? So I will have more buildings with more emissions linked to it. And this also includes, for example, the number of locations in terms of production. So will I increase my production lines a little bit, they run an hour longer, or will I need another couple of warehouses to store all the products that I have? And another point is the expansion of product and service lines. So am I doing the same things that I'm doing currently, but I might change it up a little bit and add additional products to it which have different emissions. And I think here, Rolf, it's also maybe nice to hear quickly from you, because we talked about the number of travelers quickly in the slides, but how did that relate to the growth considerations throughout our project?
Yeah, we actually started with, as you here call it, a structural growth discussion. I think it was also one of the points where Grant Thornton kind of where you triggered us into thinking, oh, maybe this is also something that we should consider, because that's not something that was top of our mind before. I think we are a company that exists for about 185 years already, so you can debate on how much structural growth we actually have. But in fact, since the setting of our base year emissions, we actually have quite a big divestiture of Abellio, which is traveling trains in Germany and the UK, which had quite some impact. So that was actually something that would be part of this structural growth part. Luckily for us, this is also something that we already corrected for in our last annual report and our emissions statement. So we didn't have to worry about that anymore, but we did engage mostly our strategy colleagues to see if are there any big plans on any new investment acquisitions or disinvestments, just to make sure that we have the right base assumptions into it. Well, for us, that's not really the case for the coming period. So then what's left is the organic growth. And there we really lean on our commercial colleagues who who have most insight into the prognosis of for us, mostly the passenger kilometers for the next 5 or 10 years or so, because for us that's quite directly linked to, of course, this pre and post passenger transport that I mentioned before, but also our train service timetable is closely related to that. And if that grows, we use a lot more energy, electricity for our trains. So that was the largest source, I think, of our organic growth. So we also decided to scale that proportionally as an assumption towards the future. And for let's say the more overhead type activities, so offices and a number of employees, we make the assumption that we are able to provide this growth with the same assets, so we don't expect a big increase there. Of course, we don't know exactly, but that's the base assumption that we're working on. And yeah, there's obviously a little bit of uncertainty in that, but I think that's something that's part of this whole transition plan, and it's also getting comfortable with dealing with this uncertainty.
And I think there are, again, like 2 nice points in there. The one thing you already anticipated, so that this plan doesn't stay something that you do separate from the rest of your company, but really integrated with the strategy that you are having. And the second part, we don't know 100%. So this expectation of business growth is also really an estimation. It is an idea to get a sort of like a feeling for where we are heading and to plan for it the best way we can, but it might obviously change throughout the future. Perfect. With that said, we're going to the science-based targets, which are a little bit of a full slide, but I will take you through in steps. And I think this is also one where there are a lot of questions around in terms of choosing. So what you see here on the slides will be more of a general overview. And it is very important per company to check at the beginning that you're making the right choices for your specific sector and operations that you're having. So how do you actually choose, and how do you make those good considerations when looking at science-based targets? First of all, we start with the identification of the base year. So we talked before about this inventory that we are making for GHG emissions, which is the start of all of our calculations. And there are a couple of concerns regarding the base year, because as we said also with the growth part, it should be a part of like the company that is reflective and shows a good estimation of how your company really is. So for example, when we talk with different companies about science-based targets, often the COVID years are not a good benchmark because production was down, people were working from home, offices weren't fully booked. So it might be not showing how your company is actually performing. So choosing the space here has two concerns. One, the part where we say it should be representative for your company, and the other part is how complete is this inventory actually? And as Rolf said earlier, there might be several years of working and collecting data. And if you have a later version that covers more topics and is more comprehensive, then it might be better to choose that one. The next part is the identification of the net zero year. So where are we actually working towards? When do we want to reach this net zero benchmark? And sort of the ultimate deadline is 2050, but depending on your company, you can also choose to be a little bit more ambitious on this, also depending on your sector. Afterwards, you will choose the actual calculation method, and I will go into the details of this in a second. And lastly, there are a couple of additional factors and industry standards that can be used mostly for high climate impact sectors. So, but first look a little bit more at the methodology that is used to actually calculate. So essentially there are three options to calculate science-based targets, which are absolute reduction, economic intensity, and physical intensity. And for most companies, we're really talking about absolute reduction. We're talking about, with all of our emissions that we're currently having, how much absolute reduction needs to happen linearly until we're reaching the targets. So what kind of percentage of reduction from the overall emissions do we need to have? The other two measures are based on intensity, which means that they're linked to an additional value. So rather than just saying we're moving from emissions A to emissions B, we are including a unit or a physical financial intensity that we're linking it to. So for example, for economic intensity, that could mean that we are having emissions per revenue or emissions per profit. And for physical intensity, that means that we can link it to a product or a service that we're providing. So for example, for NS, theoretically, that could be physical intensity about the kilometers traveled or the people in the trains. And for us as the consultancy companies, that could be by emissions per project, for example. And based on these three calculation approaches, there are two main targets that we are looking at. One is the near-term target with a time frame of 5 to 10 years, and the other one is the long-term target, which is really this emission reduction until net zero before 2050. Usually they are done together, and then there are also additional targets that can be used, which are focused on a specific sector or which are related to the products that you're having. So on the one hand, there are FLAG targets, which are targets covering land-based emissions from forest, land, and agriculture. So imagine you are a company that is producing a lot of timber or is working with a lot of milk products, for example, this could be FLAG. And then there are also additional sector targets. So for example, for the building environment, for cement companies, for the energy sector. So really sectors where we are talking about a lot of emissions within that area. And lastly, there are additional targets where we talk about specific things that we want to highlight and give them a little bit more meaning throughout. So whereas near-term, long-term targets, sector-specific targets cover really like the whole of your company, additional targets are a little bit more focused and they give you the chance to highlight certain areas. So for example, this could be on renewable electricity or on specific sub-targets, for example, in scope 3, so that you're saying, for example, we're setting an additional target on how our people are coming to work or on how transportation is done in our scope 3. And the final version that we want to highlight is regarding supplier engagement targets. So we heard from Rolf that they're working with a lot of suppliers, for example, in their stores when it comes to their NS stations. And not all of that is directly in their hands. So some of the things also require that there are changes within the value chain and in the upstream and downstream operations. And for that, it can be helpful to set supplier engagement targets where you clearly outline that they will also put additional efforts in this reduction. So you don't have to do it all alone, but get some buy-in from your broader value chain. That was a lot of information, but let's make it a little bit more practical and look at Rolf's and NS's targets specifically. Rolf, do you want to quickly walk us through how you maybe more got to these targets rather than explaining all of them in detail?
Yeah, sure. As you mentioned, base year is really important for us. We're still struggling with the effects of COVID. So the last real representative year that we had was 2019. So that's also our base year. We submitted the targets in 2023. So even then it was already 4 years prior, but that was the best information that we had. We feel that we have, since we don't have any real structural growth plans, we feel that an absolute reduction pathway is the most appropriate for us. And we follow the net zero in 2050, which is the latest date of, or latest year of that actually allows to become net zero. We do have a long-term target for our scope 1 and 2 to be already 90% reduced in 2040, because that aligns with pre-existing targets that we internally already had. So we have had a target of becoming fossil-free in 2040, and we kind of translated this into reducing at least 90% of the reductions in 2040 in scope 1 and 2 emissions, and compensating for or neutralizing the remainder of the emissions. I think I mentioned before already, we already source 100% renewable electricity. So we could have taken the easy way out and saying we use a market-based reduction strategy for scope 2, which was already zero and will remain zero. But we chose there also to keep it focused on the location-based impact, meaning that we also have a trigger internally and a reason to also cut our own electricity consumption. There's already programs that we have internally, and we want to have also this trigger to focus on that. At the same time, we're also, I guess, somewhat lucky that we live in a country where the energy transition is in full swing, so we can also take advantage a bit from the developments that are there. So I think it's a bit two-faced there. And maybe lastly to mention, we did not use the transport-specific sector standard, because at the time that we submitted, that sector standard was actually under development, and we had the advice of the science-based targets. I got into touch with them, and they said it's better to use the absolute standard in the meantime. And I think currently the whole net zero standard is under draft for version 2. So until the version 2 is released, we just see where it goes, and then maybe if there's a new standard there, then we have to update some things here and there, and to make sure that we keep on top of our game there.
Do you expect that there's a lot of change if you would do that, Rolf, or will do more? Do you think there will be a lot of change to the targets if you use the sectoral standards that might come out in the future, or will there be nuances in your strategy, basically?
I don't expect it, but it could be. I think the biggest thing that could happen there is the pathway on when is it accepted to have these 90% reduction, and also which rate of reduction until the near-term targets are there. Possibly they would change a little bit, but I don't know the exact figures. We did already also take a look at the draft from the version 2.0, and I was quite happy to read that most of the things that were optional in the current version that have become mandatory in the new version are also the choices that we made. So I think we were a bit progressive at that time, and now we can take advantage of that, so we don't have to redo anything again.
At least you were not punished as a front runner.
Exactly.
Yeah.
Perfect. I think that's a good point that you're mentioning. So there's also changing regulations. So also when we're now going into decarbonization lever, what you just mentioned is it's always a little bit about this anticipation part. Like, are you doing things just to comply with regulation, or are you really doing them because you think they make sense and we should be doing them because they will provide better results in the end? And usually if you're taking the second part, you're also well prepared to all upcoming changes that are happening in this field. So talking about decarbonization levers, so we moved from the sidelines and the framework to really the part in the middle, like how are we actually going to do this? Like how are we achieving to reach this plan, and how will we actually reduce emissions? So when talking about decarbonization levers, we really start at the beginning. So we start with our emissions, with the identification of the main drivers. So we really look at where are sort of the big chunks in our emissions, what is it that we need to focus on? So as Rolf mentioned, for example, one of the big emission factors for them are their trains and the electricity that is needed for them. Secondly, we have the identification of the decarbonization lever. So what is it in a broad sense that we want to do with these emissions? Like, what is it that we can change? What is it that we can do? What buttons can we push? Or like in Dutch, they say, like, knoppen kan je draaien. So it's really about like, where can we actually make these changes? And afterwards, we talk about the identification of potential actions. So we know where the emissions are, we know what we generally want to do with it, and then we go into the detail and we talk about, so how can we actually make this happen? And once we know this rough plan, we have to start thinking about, okay, but what does it actually take? What do we actually need to do for it? Can we do it? Are there any dependencies? What is the feasibility? And what will it actually, in the end, also deliver for us in terms of reduction? So we're going to look together at a quick example of NS, which I already mentioned, which is the energy for the trains. And as Rolf mentioned here, we're looking at it from more the location perspective. So we're not saying we are out of the woods by choosing all for green energy and relying sort of on the certificate parts only, but we're looking really on energy reduction as well. So we identified together with NS two big decarbonization levers, where one is the improvement of energy efficiency. So how can we actually bring energy usage down? And the other one is the change in energy mix. So here we are relying a little bit more on the increase of renewable energy within the Netherlands. And for the improvement of energy, one of the actions that I found was quite interesting was the adjustment of behavior of conductors. So we learned from Rolf that actually quite a lot of energy can be saved based on the driving way of the conductors. So if they brake in a different way, that energy can be saved in that sense. And when we look at the change in energy mix, it's also about like how can maybe also bigger organizations play a role in moving forward this increase of renewable energy within the Netherlands. Further, when we look at the evaluation, we thought a little bit about the reduction potential. So how much will it effectively change? And here I think we had a long discussion on where to put it. And I think important is also to mention that decarbonization lever at the beginning, when you do this initial evaluation, it's not 100% specific. It's not yet a calculation. It's more of a like, is it a lot? Is it a little? Where do we start? What do we focus on? And then we also talked about dependencies. So for example, how does actually the location-based grid mix change in the Netherlands? And how easy will it be for the organization to then afterwards also implement these decarbonization levers? So it's quite a lot of discussions, and essentially what you're checking here is more on a higher level, and we will go into action plans in a second, but maybe Rolf, you can share a little bit how this discussion went and also what kind of people you involved internally to make these choices on decarbonization levers.
Yeah, sure. I think we had the benefit or the luxury of already working on this topic for quite some years. So I think the biggest challenge was to find a way to basically put our existing programs and projects into a nice structure that's asked here, and to make sure that we aggregate it in the right level and we find the right detail. And for this, we did a big sweep of all the programs and projects that are already out there. So we engaged a lot of our colleagues from different business units and combined it with, of course, our own knowledge of projects that are ongoing internally and that maybe are not ongoing yet, but they are in concept or that we're thinking about. One of the things that we ran into was that for some colleagues, it can be quite scary to say whether they feel a reduction potential is low or high or medium because they're still thinking about it and working on it. And as mentioned before, this is inherently uncertain when looking into the future. But so I think a lot of the process was also comforting the colleagues and saying this is a plan that we will be updating yearly and that we will just refine and refine and refine. But if everybody waits to get this to give this input until it's already developed for 100%, then we miss everything and then we get delayed. So I think we have a lot, and the challenge was to get it all together and get it sort of on a level that is comparable with each other without overdoing it and taking months or years to get into the level of detail that is maybe at this stage not even that necessary yet.
Yeah, and what I'm also hearing from your explanation is like rather get started now than wait for perfection. And I think this is also what we are trying to do with our other clients, that we say like, okay, this is a living version. It is something that you will develop over time. And it is important to sit together now, make some choices, and then improve them throughout the years. Looking at the time, I think we have to move on to action plans and resource allocation. I will keep this relatively short, but essentially the important part about action plans is that there will be multiple linking to one decarbonization lever. So a decarbonization lever is really like this big categorization of how we can decrease emissions, whereas the action plans can be super specific and go in a lot more detail. And when we look at what this needs to entail, so what action plans actually have to be comprehensive, then we look at a couple of different factors. So the little brown dot at the top, linked KPIs and IROs, this is really like, how do we link this to like the company strategy? What are the importance, risks, and opportunities that we're playing into the impacts that we want to mitigate with it? And then when we look at more the yellow parts, and this is what we already did in sort of the high-level evaluation for the decarbonization levers. So what kind of reduction potential do we see? What are the dependencies and what is the feasibility? And then with action plans, we really go into detail. So what would the costs be? How much money do we actually need to spend on all of the different things? But also what kind of internal training might we need, which has additional costs? Do we need to hire an expert on energy? What are the additional factors that play into this money aspect? The second point is about timelines. Are we doing these things next year, tomorrow, or maybe only in 10 years? And then we talk about roles and responsibilities as well. So who will do these things tomorrow, next year, or in 20 years? And lastly is also really about a detailed description, and what Rolf mentioned, sort of getting all of the different pieces together and make people understand that already has a lot been there and that can be used, and making it also in a language that people can use and understand within the organization. So, well, I think this is also a little bit where we're standing in the project right now. Do you want to share a little bit how the setup will look like for action plans and the resource allocation for it?
Yeah. So we've, I think 2 months ago or something, we finalized our transition plan without the action plan. So we're now fully in the progress of trickling down this to the different business units. This is something that we chose to integrate with our yearly business planning. So that is also really from a business control point of view, it's all structured and anchored, I guess, in a good way. The challenge, I guess, over the summer months now is to make sure that everybody gets comfortable with actually filling in these details. We've kind of did this in a draft or very high level way already to really get to our first draft of the transition plan, but now we're asking them to do it in a bit more structured way and to also take ownership from it, and to basically explain to us whether this is something that is for them is just an idea with some potential, or whether it's something that's actually planned already and is also has allocated resource for it, and that we can expect to happen in the next years, and that we can also control whether it happens. And there's I think that one of the challenges there is to make the businesses feel comfortable with, even if it's not 100% finalized for the business planning already, but they have some ideas, to share them anyways, and to make sure that we can calculate them and to aggregate all of that to see if we are getting close to our reduction target in 2030 or whether there's still a big gap. And then our plan is to, when we present this, when we get all the feedback from probably in September, to get a big overview on where did we stand in 2019, where did we stand last year, which actions and reductions are planned and already checked basically in the business planning, and which actions are we thinking about doing, and what is the gap that we actually don't even have any ideas for yet. So we have to come up with new ideas, and this is something that we will then present to the board of directors and to the upper management. And my dream for this, I guess, is that if we if we see that there's some gaps there, that also there on the highest level, the directors will talk to each other and kind of basically do some swapping or some exchanging on, maybe you can do a bit more in this area, and then we can do a bit more in this area, and to share the ideas, because there's quite some transferability on the different subjects. So yeah, hopefully that we can really kickstart the conversation there in this fall.
Yeah, and I think you mentioned a lot of points that lead us to sort of like the last slides in terms of content from this webinar, sort of what really makes us a success and what makes it work. So one of our points was realistic assumptions. So also talk to the people, what is already there, what works, what exists, what are the calculations that run in the background. And often here, when we talk about climate transition plan and action planning, there's a little bit of a scare in the room, but when they realize that a lot of things have been started already, maybe not under the bigger scope, and they can just puzzle in their current knowledge, that helps a lot to drive this conversation forward. The next part is regarding the connection of the climate transition plan to broader topics and also putting that out in the company. And here you said we need all of these different people at the table. We need the board of directors to make a choice in the end. And I think also being comfortable with this gap and saying, okay, there is still a lot to do. That is something where really management buy-in helps, and to make this choice to say we have some more to do for the future and we need to make a proper plan for that. And the last part is on reporting and communication. So how do you share this both internally and externally? So will you put it in your general sustainability reporting? Will it be something that you put as a separate report? Is there maybe a training for all of your employees in the company where you share with them all of the insights that you gain throughout this journey? How will you make it really yours in the company? And with that being said, I think we spent the last 2 minutes to look quickly at the preliminary climate transition plan that has been developed by NS, and see where this can go if you walk through all of these steps.
Maybe to give a short explanation on what we see. So for us, the base year is 2019, so we already have some reductions realized. So we also want to communicate that. The dotted part is our growth, and then the biggest section in the middle is our own internal actions that we planned and that we feel that we can reduce with. So with these actions, we're not there yet. I think if you click through, there's also some explanatory lines and labels there. And then we see that the third, the biggest reduction block is actually outside of our own hands. So that's the energy transition in the Netherlands. And if that happens the way that we expect it to happen, then we will likely achieve our targets. But also that is where the biggest uncertainty, of course, is. And also we don't want to lean too much on that. So we really see this as two separate but communicating parts, of course. And then all the way on the right, there's the 2030, 40, and 50 targets in which we have to keep working towards even after 2030. If we are happy and we achieve these goals, then there's still the next ones that are around the corner. So we have to stay sharp there, I guess.
Thanks a lot. I think this is a good part, staying sharp, adjusting over time, and starting somewhere and putting it down on paper. So I think this is a very nice roundup for the technical part. We are at the end, so we will also try to answer more of the questions after the webinar. And if you have any additional questions that you would like to raise, please also feel free to reach out to us via email, both to me and Stijn, because I think we are at the end of time. So thank you very much for joining today.